Hello, folks, and thank you for joining us for today's episode of Trade the Chain. I am joined by Trade the Chain's Director of Research and Chief Community Officer, Nick Mancini, as well as Trade the Chain partner, Doug DeRosa, who we like to call our everyday guy. That's really the perspective he brings to this show now.
And we're celebrating Hat Day here at Trade the Chain, so that's exciting.
We are. We all have three Trade the Chain hats. All right, so folks, we're going to do a couple different pieces today. We're going to obviously have Nick hit the big boards, go through the market. We had some interesting Fed comments come out that Nick picked up on, and those could be telling on what direction sentiment kind of heads. We'll also be addressing what SBF came out and said, and that is that he feels we are at bottom or close to bottom as far as capitulation for the markets. And we're going to go through and discuss that, particularly with all the blood on the streets from counterparties this week. So, Doug, Nick, thank you for joining us. We're going to head in. First thing I want to point out is we have gained a little steam today. I know Nick and I were doing some scalp trading earlier. Still have a few positions open, currently long. But as you can see, we're up about 2.5% on the total market cap. Bitcoin and Ethereum really gaining some price action. Ethereum was up, look at this right here, 7% on the day. 3.7% for Bitcoin up on the day. So the market has moved a little bit. Really excited to see that. And Nick is going to tell you where we think it's going to go in the short term. So,
thank you very much, Alex. As I stare at Bitcoin creeping higher, potentially forming some bearish divergence. So that's very interesting. So if you were watching the daily show yesterday, the Trade the Chain daily show that we host on the Trade the Chain YouTube, as well as the @Trade the Chain Twitter account, you would know that we were calling right around this time frame for Bitcoin to go to 21K, based on both the fact that sentiment was picking up in a bullish direction, as well as the fact of the larger channel that we had drawn. And I'll go ahead and try to zoom out fully to give everyone a bit of a perspective here. But based on this channel, it was quite obvious that the mean of the channel, the center, would likely be retested, given basically the fact that the S&P 500 was forming a very similar formation. We had a bit of a bullish narrative in relation to some Fed speak. The Fed minutes, weren't calling for, such doom and gloom as they were. So we did have a bit of a, 1, 2, 3 punch of, things look a little bit better than they did before. We're not calling for macro bullishness. We're just calling for a price target based on technicals and sentiment. So we hit that target today, 21. We're hovering around 21.2, which is expected to be a bit of a stalwart, typically just because of where resistance was previously. The next resistance is right around 22. I think people really want 22 to kind of break above this resistance right here, but you're going to probably see, if we had higher, 21.8 being a potential target. Now, what happened recently and why we're seeing a little bit of, added zealousness on the charts, added zeal, I should say, I think that's the correct way to say it, is the fact that both Bullard and Waller, who are two different Fed governors, there's multiple Fed governors, and then there's the Fed chair, both kind of came out and gave information that the market took as dovish. And basically, Alex and Doug and I are going to discuss, what exactly they said and why, because I think it was very confusing and will only continue to get more confusing. But basically, the market now expects the federal funds rate to be less in the future, meaning I think it was around 4%, and now it's hovering around, just above 3% for Q1 2023. So the fact that the market thinks that hill that we've discussed, finding a bottom is going to be the rollover of the federal funds rate. The fact that that's lower gives the market a little bit of euphoria, gives them a little bit of hope, and allows for the bulls to take over temporarily and, of course, crush shorts wipe out leverage, and provide potentially better or worse entries depending on what trade you're looking at. So if we're looking at long term, I think this is very tough analysis to make, just because of the fact that we're hovering above resistance, we are overbought, we are in a bear market, and we had very what's the best way to say it? Kind of varying, opaque, vague Federal Reserve information that didn't come from the Federal Reserve chair and is not a fact of life, considering it's just comments on the TV screen. So it's a very tough area to trade. But I think what the bulls want is to see Bitcoin, like I said, at 21.8, 22. That is also the daily trend area. So you're going to see a lot of confluence here. And the bears, I think, want to see 21.2 slapped back and have 20.5 retested. Now, in reference to the S&P, we've got rising S&P on decreasing volume. Now, any trader will tell you that that is scary. That means that it is likely to come back down, return to support. Now, if the S&P ends up, I hate when it does that. If the S&P comes back down, you would expect it to hit resistance at 3870, support, previous resistance. And you would hope that holds for a leg higher, potentially as low as 3860, which is where the POC is. These things are never exact, so you would basically take this as your little bull zone, and then you would hope that heads higher, breaks this level, and continues up. Now, if we look at the same scenario on Bitcoin, near identical formation, we've got this rising. We had this rising wedge, rising triangle, whatever. And then it broke out. It briefly, tested just above that. It's never perfect. And has.
I know you're liking that candle right now, Nick.
I know it's mind-boggling from what we were discussing just a short time ago. But like I said, the weird thing also is the S&P 500 zoomed here 15 minutes before Bitcoin zoomed. So we're having about a 10 to 15 minute lead time on S&P action translating into Bitcoin. The S&P is coming off of its highs. It's also forming bearish divergence off of its highs, which is, and this is why, sometimes I love thick green candles, but typically they like to screw me. And clearly, if you were trading that up, you would get screwed. If you're trading this up, I have a feeling you are probably going to get screwed, at least temporarily. I would be shocked if we did not see things kind of crank back down here, at least to test this level again. Obviously this bearish divergence is not fully formed and flush, but it formed here, and it's a 15-minute lead time on the S&P 500. So we've got so much varying market data that it's extremely hard to make long-term bets. We made a long-term bet yesterday. It worked. Now is the time to be patient, assess the data, let all of the leverage get flushed at resistance, and either make a play to 22 or make a play down to 20.5. And I think that's really, that's what you do right here. Or you wait for 22 and short, or you wait for 20.5 and long. So those are your real options right now. Nothing is clear, especially after Fed governor spoke, and we have another Fed governor speaking tomorrow morning, and we have unemployment numbers tomorrow morning as well. So do I want to trade into all of that? Probably not, unless I'm doing very, low leverage minute candle scalps.
In terms of yesterday's price action, Nick, again, just putting literally the proverbial man on the street cap on right now. If you were to tell somebody that's not in this space, one of the biggest names effectively went out of business, at least short term, and you say, hey, there's this really volatile asset, the benchmark is Bitcoin, they probably would have said, oh, that thing's going to be down 2, 3, 4,000. Like, we're up 2,000, I think, right now in the week on BTC. What is this price action signaling you? Again, forgetting about the charts, just from a macro perspective, are we starting to kind of digest bad news down here at the bottom and maybe looking almost like the market looks like 6 months out, kind of discounting everything, say, hey, this is really crappy, but we still have real technology, things are looking better. Like, what are we doing right now in these markets, basically? This
is what I wanted to bring up regarding SBF in the news is he seems to be under the impression that we are at the bottom or very close to the bottom, right? And we discuss this on a daily basis nowadays. One of the things that really needs to show that bottom is blowing the leverage out of the system, finding Bitcoin's true market price. And if 40 to 20 didn't do that for you, I don't know what does. Some people are shooting for 16 to 17 to be accurate as far as Bitcoin's true price. And then you have the contagion issue, and I would probably claim to bet that 30% of it is done, maybe 40% on the high side. We still have a ways to go. But if you're looking at the news cycles and what it's doing to prices now, 3-4 weeks after we started getting pounded with bad news, it's really not affecting it. We're doing these range bound fake out bull moves, fake out bear moves, but it's not changing it. So there is a possibility that Sam could be right. We may have just shaken it out, and to Doug's point, become immune to it. What are your thoughts, Nick?
So I'm just going to have this screen up. I personally believe we should sell off at least a couple $100. So let's see if my prediction comes to fruition. Just, saying that, that green candle, I don't want anyone to go long on that because it's scary. But so that's just, we'll watch this and have some fun.
And I just want to say in full disclosure that while you were speaking, I did close shorts both on Ethereum and BTC, and
longs?
I closed longs. Sorry, apologies. Closed longs on short and or longs on BTC and ETH. I've been shorting so much I can't stop saying the word.
I know, I do the same thing when I'm on my streams. I have to remind myself.
Because I am feeling the same way you are. But I interrupted. Go ahead, Nick.
Yeah, no worries. And maybe I'll get ruined here, but I'm not. This is crazy stuff. But so in reference to what you mentioned before, is the bad news good news? Are we blowing over bad news? So Voyager gave us the indication that there was issues. That was the quote unquote market impactful news. I think anyone who saw that was fully anticipating a future with Voyager going bankrupt. And I think the same thing for Celsius, is that's why everyone sold off Cell. That's why, we had a bear narrative associated with these companies either halting operations or going bankrupt previously. That whatever the first piece of news was the canary in the coal mine. And then, so the market, what it is obviously going to do is predict what happens next. And when you see that, more likely than not, you file for bankruptcy, you have to refactor all of your operations and things of that nature. So I think in relation to what SBF was saying is hey, the contagion is more or less contained or is measured into the market based on the fact that all of this news has already come to fruition. And traders typically do not wait for more news to come in. They place their bets on that news and then wind them back or take profits when those things come. So I don't think we're at a bad news is good news portion of the cycle yet, but I do believe that the market has already priced in 90 to 95, potentially 100% of the quote unquote contagion news that we're aware of, meaning 3AC, meaning Voyager, meaning Celsius, meaning BlockFi, meaning a few of the others that we've heard of, Vault and all that nonsense. So in that sense, if you're looking at it from more of a fundamental perspective and saying that that's behind us, the market's fully priced that in, bad news associated with things that we already know about are no longer as impactful. And the market will begin focusing on fundamentals that it deems more impactful, which would be associated with the Fed, inflation, and watching out for Federal Reserve governors, because that contagion stuff really piped us down to 17.5. And now we've really flushed that out. Clearly there's more leverage being added in the system. I know many people who bought the dip and are planning on selling the tip. I don't know many people who quote unquote bought, generational buys. I do know a few people that have begun to dip their toes in under 20K and under $1,000 on ETH, but I don't know anyone who's fully sold that this is the bottom, without more flush out coming in potentially later this quarter or in Q4. We have the Mt. Gox Bitcoins still happening. Celsius just received another, $240 million worth of Bitcoin. And plenty of other companies are still facing problems where they may need to create liquidity to solve those problems. And that may come with a bear market rally. Why would I sell at 20 when, market psychology says, a bear market rally is coming? So, we have to be able to understand those things and also assess that a V recovery is very unlikely. Why would we have a V? We had a V when the Fed was printing $1 trillion. And that's not happening. So it doesn't seem likely we have a V. It doesn't seem likely that all of the liquidity issues are solved, but it does seem like the obvious things that we know about are behind us. And we will have to then understand the fact that only new bad news is going to impact us rather than old bad news, if that makes sense. In my opinion.
I mean, to Patrick Mannering's point in the comments, this is exactly what we're talking about. It's bear market immunity. We just become so beat down with the various indicators and news that we don't feel it anymore. Now, what I have up here is I have a chart of the one-day chart of Celsius, a one-day chart of Voyager. I actually should switch those. Let's go to the 1 month on each. But we had Celsius go down and it dipped down to less than 20 cents on this chart right here, and then rebounded up over $1.50. To zoom out even more to the 3 month, coming off a $3 peak back there in let's say March, beginning of April. Now, what is Voyager? And by the way, folks, and if you're playing around with any of the Celsius, any of the Cell token or VGX token right now, it's purely a gamble. We don't recommend it at all. I know everybody saw the hashtag Cell Squeeze when the conspiracy theories were going around, but it's just a gamble. Now, I don't know if Cell token recovers. I want to talk about Celsius for a second. Now, with Celsius, there was what was it? Their loans to MakerDAO. Apologize for the brain freeze. They've now paid entirely down the MakerDAO loan. One, I'm curious on what's going behind the scenes, how it was done. Where'd that funding come from? It was a decent 9-figure chunk. And so I want to kind of get what your speculation is on it. Nick, Doug, chime in. How did Celsius get a $150 million MakerDAO loan paid off in the course of, I think, 6 days?
How? I have no clue. And that's, I think, potentially either a testament to leadership making crazy deals in the back end or their trading outfit saving the entire company, which is both are equally plausible, I think, at this point. But I think the worry for me in relation to Mt. Gox is supply. Demand is not picking up anytime soon in a significant fashion, especially if we have a recession coming up. And I think we're going to see consumer spending and sentiment continue to decrease into the latter half of the year as people realize they have less money to spend on holidays and vacations. So more supply with stale demand, basic economics says price goes lower. That's only if that supply is introduced on the public market. So, there's a back and forth here to be had. Does all of the Mt. Gox and Celsius supply get reintroduced? Probably not. Does a good bit? Likely. Does that overtake demand? We're going to have to see, but it's an overhang that you have to be aware of and something that any bull, I think, would keep them up at night right now, at least.
And something too to keep in mind, as these markets appreciate, obviously BTC and ETH, those were highly formed use of collateral for loans. These loans then will essentially equity out, right? The LTVs will come more in line and will be more attractive. And obviously, therefore, these companies across the spectrum will be more stable. So you obviously have the forced liquidations that are over now, but any loans that are still in existing are going to certainly look a lot better on loan books. So keep that in mind as this market, climbs back forward. So.
Yeah, and one person dropped in there funding from SBF Alameda. There's a lot of news reports going out, basically, quote unquote, calling Sam Bankman-Fried the central bank of crypto right now. I don't necessarily think that's a good thing to be positioning yourself as. He did backstop his statements with $2 billion in free cash for acquisitions. We'll see how that works. Could it be what Celsius is doing? Maybe. I don't know. Nobody's public over there. They don't have to disclose it. I guess the real use case or experiment to say is how these BlockFi transactions, Voyager transactions go through. So we'll see. I know the difference between Voyager and Celsius is Mashinsky's been fighting off trying to get filed for Chapter 11. So whether that's a good thing or a bad thing, we'll find out. Meanwhile, Nick, while we've been talking, I mean, can you just look at that chart that we have up on the screen?
I was a bit wrong. We still have technically potential for bearish divergence, but this is quite the rip. And I think the interesting thing about it is, what's crazy here is usually you'll see this type of indication. We've just been selling up. I don't know where this demand is coming from. And I've been trying to figure out exactly what, so Bitfinex has done most of the selling and Coinbase has done most of the buying, which is also fascinating. And I really can't make sense of this because typically I love this little indicator right here. It gives me great signal. And that's why when I was messaging you, I was like, I'm not ready to do anything yet because we had such differences here. And this makes me want to start shorting at this level. Just because we have no legitimate buy interest here. It does seem like it's kind of forced higher. And let's go look at perps real quick. Yeah, look at this. So FTX spot was very interested. And now, we had a lot of perp interest. So look at, this is fascinating. So Bitfinex and FTX spot helped. But it was perps that really pushed us higher. And the fact that we had a lot of spot selling on both Binance and Coinbase, we're watching this unravel real time. We're watching these sells come in. I don't know how much it's going to unravel, but this to me, like I said before, an unravel was coming no matter what, because we had so much perp interest, and Bitfinex spot I don't trust ever. So the fact that Coinbase was selling into this rally should have told you everything that you needed to know.
We saw this before. We were discussing this the other day, and looking at this particular chart in particularly on the front running of the rally. So it's interesting.
Let me refresh this and see if we can't see, because those 1 minute candles right there were very interesting. And every time I always forget to refresh this before or after I close my VPN. But yeah, so this little thing right here. So look. This should have been obvious to us, Alex. I don't know why the hell I didn't check this first. Look who led this entire rally. FTX perps. This was destined to come off because literally FTX and Bybit loved it, and then everyone else piled in, and Coinbase sold the top. And FTX perps are unwinding now, of course. So that's why I don't trust things like this all the time, and especially this is why I love this metric, because if perps are leading spot, you're gonna have a problem, and if spot is leading perps, then you're probably gonna have a good day, depending on where you're trading. But I would be shocked if this really just pipes up to 22. I know 21.2 is a big number. The fact that we actually kind of found some support there is actually, definitely is going to give some people some hope. But I would be absolutely shocked if this did not unwind to at least 21, based on the perp interest. Oh, we're getting more perp interest here. So maybe this, and based on that, if we're going to get this much perp interest in buying and this stays, then it'll be 22 and we'll get killed off of 22. But anytime you see perps lead the charge like this, is you typically have a big problem on your hands in the other direction if you get caught flat-footed. So
there
a
it is,
little
folks.
learning lesson there.
Always, listen. I'm of the mindset that following FTX's order flow right now is a leading indicator in the market.
Yeah.
Folks, thanks for joining us. I know it's been a crazy week. Next week, because the last month has been nuts. Next week I'm going to have Corey Clipston on. the show to talk about DeFi or talked about decentralization. And, you know, he's well-known in the space, co-founder, CEO of Swan Bitcoin, and really dig into, you know, why we're headed towards a decentralized type ecosystem, evident from what's happened the last 4 weeks. So also going to keep up to date on what's going on with all the different counterparties. I know we had a great show yesterday with Mark Lopresti. A lot of love shown for that, so thank you very much. We're going to keep getting those experts on throughout the course of next week as well, and really try to keep the truth information about what's going on delivered to all you folks. So definitely, if you're not a subscriber, hit the subscribe button, hit the like button, show some love, and we'll let you know what special guests we're going to have next to dig through the ashes of crypto fallout 2022. So thanks again, folks. Appreciate you guys watching. Hang on to those handlebars now more than ever.